Welcome and thank you for joining Oil and Gas 360. We're at EnerCom's London Oil and Gas Conference with Mike Marrandino, President and CEO of Primary Petroleum. How's it going, Mike?
Very well, very well.
Well, thank you for joining us. And your company's amassed more than 200,000 acres in the emerging Alberta Basin Bakken. Can you tell us a little bit about how you ended up in the play?
Sure. Well, currently we're sitting at around 290,000 net acres. We got into the play in early 2007 as we were looking for opportunity in the Western Canada Sedimentary Basin. And we soon realized a discrepancy in leasing costs between acquiring an acre in Montana compared to acquiring an acre in Alberta. In Alberta, back then you were paying over $200 an acre. In Montana, you're paying $1.50 an acre. Geology is the same. It's just that border has a big effect on the cost of acreage. As our team was very comfortable working in the sedimentary basin, we, in our research and our workings, we found that the Western Montana was very prolific for oil in the Sunburst and Madison formations. Those formations run between 2,900 and 3,400 feet. So we started putting together our land position back then, and we acquired in late 2007, 2008, about 110,000 acres. We went forward and shot about 25 miles of 3D seismic, drilled 4 wells in 2008, which we had a Sunburst discovery, and we had also oil in the Madison. Our Sunburst well IP'd at about 105 barrels a day. We brought it on stream at 60 barrels a day. Back in 2008, when oil was $120 a barrel and those well costs were $400,000 a well, very easy mathematics to see that payout happened very quickly. At the end of 2008, we put together a development program of wanting to go forward and drill another 10 to 12 wells in the area for Sunburst. When we went back to the markets in early 2009, oil sort of fell out of bed back to the $35 level. The financial markets were a bit of a crisis. So Primary Petroleum sort of pulled in its horns and rode out 2009 with the land position that I had in place. It wasn't until the end of 2009 when Newfield's exploration came into the area and acquired 156,000 acres just to the north of us, and they paid $12 million, or an average cost of $85 an acre. Well, our market cap at the time was $3 million, and we had 110,000 acres. In February of 2010, when Rosetta, who acquired their acreage the previous year in early 2009, came out with the findings of their 3-well drilling program that really started the whole play, the waterfall effect, and a big land grab. The findings from their 3 wells identified that they had oil saturation in the Lodgepole, the Bakken, the Three Forks, and the Nisku formations. And the upper 3 zones of the Lodgepole, Bakken, and Three Forks were overpressurized. They identified their resource calculation of original oil in place of between 13 and 15 million barrels per section. That alone set off probably close to $250 million in land acquisition on both sides of the border. And in fact, some of the most highest cost on a per acre basis went in March of just a few months ago at $2,500 an acre. Primary Petroleum in February of 2010, from that findings of Rosetta, started reviewing their land position for the deeper horizons of the Bakken, which sits between about 4,500 and 7,500 feet on our lands, deeper to the west along the Front Range, and then it goes up dip towards the east. We raised about $6 million in 2010. We grew our land position from 110,000 to 290,000, and really evaluated the data that we found over our land to not only confirm the presence of the formation, but it's also, we confirmed the contiguous nature of a northwest-southeast type of orientation. The thickness of the formation ranges from about 30 to 40 feet up to about 120 feet in thickness. We actually found a core on our land holdings that was drilled through the Bakken Formation, and the core is at the USGS facility in Denver. There was some geochem work done on that core, and it came out with a total organic content percentage of 14.2%. Canadian Discovery did a similar type of research on all of the Bakken wells and core data in southern Alberta and in northern Montana. That one core of our land had the highest percentage of all of the data that's come out from Canadian Discovery. Most of the TOC numbers in the area were between 3.5% and 10%. To sort of put it in context, total organic content percentage in the Williston Basin, which in eastern Montana, roughly is around 10 or 11%. So very exciting for us, and we continue to further evaluate our acreage position in order to de-risk it along with what the majors are doing.
So further development plans going forward. I know this past year you raised nearly $17.2 million going to the market. How do you plan to allocate the capital raised from the offering? In terms
Sure. In February of 2011, Macquarie Capital Markets raised us $17.25 million. We're going to use that money to further de-risk our play. It's sort of a three-tiered approach. We're going to continue with our land acquisition strategy, as there's some key areas we want to continue to fill in. We've allocated $5 million towards a 100 square mile 3D seismic program, and we've allocated $6 million to a 6 vertical well stratigraphic test later on this fall. So we'll be drilling 6 wells through the Bakken Formation right into the Nisku. We'll core and log about 180 feet through the Lodgepole Bakken and Three Forks Formation and analyze the source rock for data on further development work in the area.
Touch a little on the resource potential. I know you talked a little bit about the TOC content in the play and in the core samples, but sort of touch on the resource potential and maybe the economics associated with some of the players in the Bakken.
Sure. To date, there's been some production on both sides of the border that's actually come forward. There's about 60 wells that are either permitted, are currently being drilled, have been drilled or completed, or producing right now. On the Alberta side of it, it's the production that's been made public is pretty well online with expectations. Wells are coming in around the 250 barrels a day range in production. Estimated early EURs of estimated ultimate recovery is around between 250,000 and 300,000 barrels of oil. On the Montana side, currently Newfield is producing from 2 horizontal wells. They haven't publicly announced what the flow rates are, but industry estimates based on the equipment that's on site, it's probably producing somewhere in the 250 to 500 barrels a day range. But if you look at the economics as we see going forward here, and if you use the estimates that Rosetta's come forth with 13 to 15 million barrels per section, we simplify it by saying let's take, for example, 10 million barrels per section of a resource calculation. I think it's pretty safe that we're going to get recovery factors of around 10%. So that's about 1 million barrels per section there. We're estimating 2 wells per section with on 320 acre spacings. Well costs, which will include about a 3,000 to 4,000 foot lateral with a 10 to 12 stage frac, about $4 million a well. If you use IP rates of around 250 barrels a day and EURs per well of somewhere around 250,000 barrels and a flat price deck of $75 a barrel, you're going to get internal rate of returns on those wells of around 75%. Very economic. Put that in context right now compared to the costs in the Williston Basin. Williston Basin right now are running IRRs of around 30 to 35%.
So quite attractive. Mike, I really appreciate you taking the time to talk with us today.
Thank you very much.